Hello, this is Jordan. This video is being recorded on Tuesday, December 27th, 2022. Thank you so much for joining me today. In this video, I'm going to discuss the two commodities that you should avoid in 2023. And I'm looking at commodity industries as far as the stocks, so not the physical commodities. The first one is lithium. Now, lithium has been extremely popular for several years. The price of lithium has made a gigantic move. I must confess, I don't follow it that closely. So, with respect to the fundamentals, I don't know a whole lot. So, I'd listen to somebody else on that front. But I can tell you about the technicals as far as the ETF here. The LIT trades a fair amount of volume. And you can see this huge move from the March 2020 low up to the peak at the end of 2021. And essentially what we see here is LIT, the ETF, this has had a significant technical breakdown. This is the weekly candle chart. You'll see the same. It looks even worse on the daily chart. But looking here, we can see that it's broken below 65. And so this is at least at an 18-month low. And if we're looking at this breakdown, at least here on the weekly chart, it projects down to a measured downside target of about 49 or 50 or so. So looking at 49. Now, when you actually look at the daily chart and you see the breakdown there, it projects a little bit lower than 49, I believe, into the mid 40s. And one other thing, if you're looking at a historical look of LIT, previous significant historical resistance was around 40. So 40 is going to be major support. So if I was looking to buy lithium stocks or invest or trade LIT from the long side, I would not really touch it until it got down below 50. If it gets extremely oversold and it trades down into the low to mid 40s, that's going to be the area where it could form a base and start to turn around. But here and now, looking at this, this has had a significant technical breakdown, and so I wouldn't want to own this or lithium stocks this year. I think it's going to be a rough year for lithium. Okay, now here's one where I know there's a lot of fans of uranium, so I know a lot of people are going to be unhappy with me for talking about this and putting uranium up as one of the two. Not trying to troll, but uranium stocks have not broken down yet like lithium, so we do have to mention that. However, if we're looking at the UAR ETF, and I have another chart of this, this is a weekly chart here, and it's clear if UAR breaks 18, then like lithium, it's broken down, and it's going to trade down to 12 or 13, in my opinion, or at least that's the downside risk. So the problem with URA is we have a clear, I don't want to say that's a double top, but you can see looking back at the end of 21, it made a peak, and then early 22, it made a peak. And since then, this is really bearish price action. This is not a bullish consolidation because, we see the move down in the second quarter of 2022. And yes, uranium has been able to stabilize a little bit and rally, but if we look at what's happened over the last 3 months or so, or at least since September, URA has fallen below the equivalent to the 200-day and 400-day moving averages. So that's really significant, falling below those moving averages. And you look at the red arrows there, so there has been a failure at those moving averages. So now, again, uranium stocks have not completely broken down yet like lithium, but I think the balance of the probability here is that if we're going to get another leg lower in the S&P 500, we're getting a recession. I think in that scenario, energy stocks, which have been holding up really, really well, I think you'll see energy stocks come down, and uranium stocks will probably follow energy stocks. So I think that's partially why they've been holding up, because they tend to follow energy stocks. And again, energy stocks have done really, really well. And look, energy stocks, which uranium stocks follow, they're typically a late cycle play. Remember, they really didn't get going. I mean, they did bottom in March 2020, but then they had a big pullback into December of that year. So they didn't really get go. They were the last group to really get going in earnest. And so it makes sense that they're going to be one of the last to break down and cave into the bear market. So that's another thing. Fundamentally, if we're just looking at the macro cycle, I don't think this is the time where you really want to own energy stocks. Now, I know that, big picture fundamentals are really, really bullish. And, after the end of the bear market in the S&P and we get towards the end of the recession, that could be the scenario when you want to be a strong buyer of energy stocks. So for those reasons, I think, I would avoid uranium stocks this year. Again, I know a lot of people are not going to be happy with that. But and here's looking at the daily chart here. And so you can see the blue trend line looks a little different, but you look at the highlighted price action there. You see the 2 or 3 different failures at the moving averages there. So this is more, I'd call it 60-40 that this is a bear flag consolidation. This is not a bullish consolidation. You would really need to see URA make a big rebound here and trade above, the moving average resistance in the 21, the mid 21s. If this could get up to 23, 24 and form a base there, then I'd be completely wrong with what I'm talking about. So it's good to throw in that caveat. But again, if the stock market is going to make another leg lower, the economy is going into recession, that's going to put downside pressure on most stocks. And yes, I also see that potentially happening at some point, in the next month or two with gold and silver stocks as well. But they're in a different part of the macro cycle. Those are gold especially is what you want to own here. It's not things that are more economically sensitive, those types of commodities. But look, so energy's bouncing a little bit with the market. But, you see URAs at $20. What happens if it loses this trend line and it falls to 1918? Folks, that's a really significant breakdown. So you want to be really careful with your expectations. Everywhere on Twitter, everyone is bullish on uranium. I've seen numerous videos. People are talking about, the fundamentals, the fuel cycle, this, and this. All these things are bullish. I get it. Okay, the fundamentals, we're in a new commodity bull market. It's great. But if we look at the price action here of URA, again, the weekly chart here, that line at 18, and you can see here the daily chart. If more selling comes into this, it's not going to be a good year for uranium stocks. So I know that people are going to be very unhappy with me saying this, but you want to be a little careful because there's just a lot of bull sentiment on uranium in uranium stocks. And right now the macro cycle where we are in that's not that supportive of energy and energy stocks. And the technicals here for uranium stocks, they're not good. This is concerning if you're a uranium bull. So, let me know what you think. I'm sure you won't hold back with the comments, but that's how I see it. These are the 2 commodities you want to avoid this year: lithium, uranium. There's probably a few others as well. Lithium especially, but be careful with uranium because if there's another leg lower, it's going to break down and you'll see more selling after that. That's the video for today. Let me know what you think, and I'll talk to you guys again soon.